I'm with Holland & Hart. I'm the head of the firm's healthcare group. We welcome you all to our webinar or teleconference today dealing with the PRF funds, an update concerning some of the recent developments, and hopefully we'll be able to give you some guidance as you move forward in these somewhat uncertain times. Very pleased to be joined today by Tyler Bernier from Eide Bailly. Eide Bailly, as you know, is a national accounting firm that has a large practice in advising healthcare clients, and Tyler is a leader at the firm in discussing the PRF issue. So very grateful to have Tyler with us today. As far as the topics that we want to talk about today, I'm going to spend just a few minutes kind of laying the groundwork, giving a quick overview of where we are with the PRF funds right now. But the majority of the program will be spent by Tyler. Tyler's going to talk to us about the reporting requirements and some of the recent guidance that has come out recently from the HHS concerning the reporting requirements. As you know, the PRF funds and the CARES Act guidance is changing almost rapidly. In fact, just on December 4th, just a couple of days ago, we got additional guidance that changed somewhat significantly some of the issues that address PRF funds. We'll talk a little bit more about that today. So when it comes to addressing the issues we're going to talk about today, just remember that this is current as of today, but who knows what will happen tomorrow or the next day after that. So it's important for all of you to make sure that you're aware of current developments when it comes to the PRF funds, that you are familiar with the PRF fund website that's up there on the screen right now. Hopefully you're familiar with that and have accessed that for different content for providers, general information, FAQs that are periodically updated. And when it comes to Tyler's presentation, there's a whole section dealing with reporting and auditing. We've also provided you with some written materials. If you haven't received those, then Laura should have sent you a link. You can contact Laura Squires. I sent you in the chat feature Laura's contact information. You can get that information and those written materials by going to checking with Laura. Alternatively, they're available on the CARES Act website at those links that are up there on the screen. So with that said, let's talk a little bit about the PRF fund. Where are we? Well, they've made their distributions. All of the distributions that have been announced so far, those have all gone out, or at least the time has passed for the applications. I suppose some of you still haven't received some of the phase 3 general distributions, but the deadline for applying for those distributions, at least the ones that have been announced, have all passed. The deadline for amending your applications is passed for all of those. There may be future distributions that are made, particularly with phase 3 funds after they've done the initial distribution. They see how much is left. They may be doing additional distributions in the past, but for right now, you got what you got. I can remember my mom telling me one time that you get what you get and you don't throw a fit. That's kind of the way it works with the PRF funds. The PRF funds were disseminated based on your criteria at a particular point in time. HHS sent that out, and they specifically have stated that there is no appeals process. You got what you got, and there's really no way to appeal that. If you're wanting to know what the status of your current application is for the phase 3, then you can contact the provider support line. If you have questions, you can try to contact the provider support line, but HHS has suggested that they really aren't taking many inquiries, and there you go. You are where you're at. For those of you who've received the PRF funds, as you know, you're required to attest to certain things as part of that PRF fund. You were supposed to attest directly by going onto the website, but even if you don't go onto the website and do the attestation, you're deemed to have attested to receiving those funds if you retain those funds for 90 days. Not only are you deemed to have attested to receiving those funds, but also you are deemed to have agreed to the terms and conditions that are associated with that payment. Now, if you've done that attestation and you accepted the PRF payments, but now you're concerned about whether or not you should have, or whether or not you want to retain those funds because of the strings and the terms and conditions that are associated with them, then you can reject those funds and retract your attestation. In order to do that, you've got to contact the provider support line that's up there on the screen. When you do that attestation, of course, there are strings that are attached to the PRF funds, particularly the terms and conditions. All of those terms and conditions apply across the board to the general PRF funds. Most of them are, track each other. There isn't a whole lot of changes. But remember that in addition to the relevant terms and conditions that are associated with each one of those tranches, the terms and conditions specifically state that you're also subject to any other relevant statutes and regulations that may be put in place concerning this. We haven't got a lot of guidance on what those other statutes or regulations are, but just make sure that you, again, continue to track the requirements under the PRF website so that you're aware of any additional conditions that are going to be imposed upon you as you go along and use those funds. The trigger for your ability to receive those funds, of course, you are only eligible to receive those funds if you, on or after January 31st, 2020, provided diagnosis, testing, or care for individuals with possible or actual cases of COVID-19. That's kind of the baseline for determining whether or not you're eligible. That affects you if, for example, you sold your business before January 31st, 2020, so you didn't provide any of those services after that, then you can't retain those PRF funds. Similarly, if you acquired another provider after January 31st, 2020, that provider cannot transfer those funds to you. Your eligibility depends on whether or not you are, after January 31st, 2020, you are using those funds or you provided care to potential COVID patients. As part of that certification or attestation, you have to certify that the payment will only be used to prevent, prepare for, and respond to coronavirus, and that the payment will only reimburse the recipient for healthcare-related expenses or lost revenues that are attributable to coronavirus. So it's only going to be used for those purposes. That's a hot topic right now. In the post-payment notice that just came out on November 2nd, the government has modified exactly what are permissible uses. Tyler's going to get into that in a little bit more detail, but if you haven't looked at the recent guidance that came out on October 22nd and also November 2nd, then you'll want to take a look at that because it provides clarification for what are the permissible uses. Generally, it applies to healthcare-related expenses. It also applies to certain lost revenues, but they've made significant changes concerning how those lost revenues are going to be calculated, as well as caps on the lost revenues to ensure that you are not making profits because of those COVID payments, that you are not profiting just from the COVID payments. In addition, as far as healthcare-related expenses, in some of the most recent guidance, the government has emphasized that you can also get reimbursed, use the PRF funds for COVID vaccinations, including acquiring the vaccinations, transportation costs of the vaccinations, additional refrigerators or other storage or means needed in order to accomplish the vaccinations, personnel costs to provide the vaccinations to others. All of those are permissible expenses to which you can apply the PRF funds. Just a note, you cannot apply PRF funds for vaccinations to Medicare, Medicaid, or CHIP beneficiaries because those are covered by those other federal programs. And of course, one of the conditions for use of PRF funds is you can't claim PRF funds if those same costs are reimbursable under another federal or state program. The terms and conditions also set forth certain impermissible uses. I want to make sure that you don't forget about that. We focus a lot on the permissible uses, but just remember that the terms and conditions prohibit using the PRF payments to cover expenses or losses that have been reimbursed from other sources or that other sources are obligated to reimburse. So as I mentioned, you have to be aware of using the funds for expenses covered by, for example, items or services that are otherwise covered by Medicare, Medicaid, CHIP. You can participate in the Paycheck Protection Program, but to the extent that you're getting paid by the Paycheck Protection Program, you can't double dip. If there are other PRF distributions, including targeted distributions, you have to make sure that you're accounting for where that money goes and that you're not double dipping. Some of the programs, some of the states have additional COVID programs for like nursing homes and the like. To the extent that you get monies from those other state programs, you can't claim it under the PRF funds. Although we haven't received a lot of guidance concerning this, there's the potential for private obligations too, to the extent that you have a private obligor, somebody in a private payer or the like who's obligated to cover those costs, then you may not be able to claim the PRF funds. We're waiting for additional guidance on those types of issues. Remember, you cannot use PRF payments to pay salary of an individual in excess of the executive level 2 amount, which is $197,300. So you can't pay your executives, use the PRF funds to pay in excess of that. That salary cap is exclusive of fringe benefits. You could use non-federal funds to pay the salary in excess of the salary cap. There are a bunch of esoteric impermissible uses that you can't use the PRF funds for. Most of those are completely irrelevant to anything that exists in the real world. I'm assuming you're not worried about that. As far as the use of the PRF payments, generally you can use those PRF payments to cover expenses that you incurred most likely between January 1st, 2020 and June 30th, 2021. That's your window. Theoretically, you could use PRF funds to cover expenses that you incurred before January 1st, 2020, but HHS said that they expect it would be highly unusual for providers to have incurred eligible expenses prior to January 1st, 2020. So if you tried to claim that, they may audit you pretty carefully on that. On the other hand, providers must expend those funds by June 30th, 2020. So that's the outside date. If you want to use that money, you need to make sure you use it by June 30th, 2021. At least that's the current guidance. If on June 30th, 2021, the providers have leftover PRF money that they cannot expend on permissible expenses or losses, then they're going to have to return that excess money back to HHS. Remember your documentation requirements. You've got to maintain documentation supporting your use of those funds for 3 years from the date of the last expenditure. The government has the ability to come in and audit and take a look at that. You're obligated to comply with all audits as part of those terms and conditions. As part of this certification, you have to certify that all the info you provide in the course of your applications and the like is true, accurate, complete to the best of your knowledge. And HHS has clarified, they've warned you that if there is any deliberate omission, misrepresentation, or falsification, that you could be subject to civil, criminal, or administrative penalties. The government will come back and recoup any amounts that have not been fully expended on the combination of healthcare expenses and lost revenues attributable to coronavirus by the end of the final reporting period, i.e. June 30th, 2021. You'd have to return that money back to HHS. We don't have a lot of guidance on how exactly that's going to work. In the relatively recent updated FAQs, the government has confirmed that they will recoup identified overpayments, and specifically in some of the recent guidance, they've kind of gone back on what they said earlier. Earlier, they said that if you receive money overpayments to what you were supposed to have received, that you could go ahead and keep that money so long as you used them for a permissible expense. In the most recent guidance or the recent FAQs, they've actually taken that type of language out. Instead, they've said that if the provider believes that you've received an overpayment, then you've got an obligation to contact the provider support line and presumably return that money that you weren't otherwise entitled to. The government has, the FAQs contain guidance concerning how you can return that money back. If you want to voluntarily return some of the money, even though you're entitled to it, you can go ahead and do that, although I'm not quite sure why you would want to, but if you want to, you certainly can. But once you turn that money back into them, you can't get it back. You can apply for a future tranche to the extent there is one, but you otherwise can't change your mind. If you kept that money in an interest-bearing account, then as part of the money that you return back to the government, you also have to return the interest that accrued on that money that was retained in the interest-bearing account. If you maintain that money in a non-interest-bearing account, then you have no interest to return. You just return the money. HHS will allocate those return payments for future PRF distributions. If you are dealing with a parent subsidiary situation or you're trying to allocate those PRF payments out among subsidiaries or affiliates, just know this: the government has modified those requirements in the prior guidance. Make sure that you're up on the most recent guidance dealing with those transfer of the money between affiliated entities. When it comes to transferring monies or the PRF payments, if there's a sale of a provider, then just remember that generally the recipient seller of a PRF payment may not transfer the funds to the buyer. You can't send it on. They went to the recipient and they can't transfer that to some third party. So if it's an asset sale, you can't transfer the PRF payments to a buyer. If it's an equity sale, then of course the recipient remains in business, so the PRF funds remain with the recipient. If the recipient, even in those situations, if there is a sale, the recipient must still satisfy the terms and conditions associated with that trans. That means that they have to attest that it provided COVID care after January 31st, 2020. If they didn't because of the sale, then they can't comply with the terms and conditions and they would be obligated to refund that money. HHS will, they made it clear that they will recoup the funds if they're not used or if you fail to comply with the terms and the conditions. The HHS has emphasized that they'll have significant anti-fraud monitoring to ensure that we are complying with the rules and the terms and conditions. The failure to return the money when you should, or to keep the money when you made false representations and the like, could subject to the False Claims Act liability, which can result in lots of different penalties, including civil or penalties, multiples of damages, could result in exclusion from Medicare and Medicaid. In addition, if it amounts to fraud, then you could be subject to additional federal fraud and abuse laws. All right, that is kind of a quick overview of where we are with the PRF fund program right now. And I'll turn the time over to Tyler now, and Tyler can talk more about the repayment obligations and kind of what you guys have to deal with now over the next few months. Tyler, are you there? Can you take it away?
Excellent. Thank you, Kim. And once again, this is Tyler Bernier. I'm a partner with Eide Bailly out of our Oklahoma City office. Exclusively work with healthcare entities. But as Kim said, kind of spending a large portion of my time on the provider relief funds these days. I see from the listing of attendees, there's a lot of people I recognize. So either you're gluttons for punishment, as I am, or hopefully not. I'm not explaining it well in other sessions, but if nothing else, let's see if we can get you some good information that's useful. I appreciate, Kim, you covering all of that information that you just did, because it's good to get set back up. Oftentimes, we kind of get lost in the chaos of the constant movement of these program rules and regulations and guidance and frequently asked questions, et cetera. So good to kind of set the groundwork, and then from there, let's figure out what your next steps are. Kim already mentioned this, so I'm gonna kick it off once again, because this is a really recent release and can be overlooked at times. HHS modified a pretty significant frequently asked question on the 4th, and it has to do with what if the payment you received is greater than expected or received in error. First off, I think it's important to understand that they use both received in error and greater than expected, because I know a number of organizations that did not receive any funds in error, but potentially received more than they expected because of the line items on the tax returns or other reporting that was required to be input into the application process. So you can see here what the FAQ says, and it's, again, significantly different than what previously was presented. If you're in this situation, I think this is definitely one to look at, because it really raises the risk of potentially a substantial amount of funds that you receive. So let's kick it off to the next group, and what we're really going to be talking about here for the vast majority of this webinar, the reporting requirements. So HHS distributed all these funds through the general and targeted distributions. They keep putting out FAQs and other guidance. But ultimately, what they said and what they released in September, and the newest version is dated November 2nd, is that any recipient that received in excess of $10,000 in the aggregate, important to note that, so not just one payment or each payment individually, they need to complete this required report. It's also worth noting, even though there were a bunch of distributions made, this report does not apply to the nursing home infection control distribution or the rural health clinic testing distribution. And then the uninsured program, this is the program where you could sign up through a portal, and if you treated individuals with actual cases of COVID and they were uninsured, you could bill through that portal for Medicare. That is a separate program. It falls under the umbrella of the Provider Relief Fund as it relates to the CARES Act, but it's a separate program in terms of how it's monitored, how it's tracked, and how you need to maintain compliance. So important to acknowledge those three things off the bat. So what's the timeline look like? HHS is requiring, as Kim said, that all funds be used by June 30th, 2021. However, they kind of put an interim date in here. They are, as we'll see in the next few slides, measuring most things right now on a calendar year basis. Calendar year 2020, and in a lot of scenarios in comparison to calendar year 2019. So because of that, they are going to be requiring this report for calendar year 2020 data. The portal is not yet open, but the requirements that are going to be needed have been issued in that November 2nd post-payment document. The first report is going to be due by February 15th, and HHS doesn't expect the portal to be open by January 15th. Now, I got a couple of issues with this. First off, I haven't seen anything in the last 6 months be done on time. And on top of that, HHS is effectively giving providers 30 days or less to be able to understand and then input data into a portal based on rules that keep changing. That concerns me. Hopefully it concerns you. So what can we do now to kind of prepare? I think you really need to start tracking the data that's on the report, and we'll talk through what that looks like. So if you complete the 2020 calendar year report and you fully expended all your funds, you done? Happily, yes. If you're in that scenario, that's your one and only report. If you did not, you do have through June 30th, as Kim noted. However, you will have to submit a second report. Same kind of portal, same kind of information, and that report is going to be due by July 31st, 2021. So once again, with both of these reports, there is not a lot of time between the close period and when the due dates are. So why are we focusing on this report? It seems like one small component in the vast realm of everything Provider Relief Fund. Well, this report is going to be important for a number of reasons. One, it determines the amounts that are being claimed under this program. So what are you claiming from an expense or a lost revenue perspective? That is what you're reporting, and that's ultimately what is going to be subject to audit, whether that's through a federal program audit, if you exceed the $750,000 threshold, often referred to as a single audit for those of us in the nonprofit and government world, a federal funds audit, or a program-specific audit for those of us in the for-profit world, and likely something completely new and different. Most important, audits by inspector generals, HHS, or others. If anyone on this webinar has been involved in disaster-type funding or other government programs historically, so for the hospitals, think electronic health record incentive payments, or those in the South, Katrina funding. You can name the examples over and over. What happens is years later is when the audits come through. So now is the time to identify and be really confident that what you're putting on that report you can support, or at least you have adequate documentation to support. So what are the reporting elements? There's 4 different categories that are on that post-reporting requirement document. The first is demographic information. For the most part, this should seem fairly simple. I'll show you a slide next that's going to talk about how they define the reporting entity, because that is important. Second are expenses attributable to coronavirus. So these are your actual expenditures that you're assigning to this program. Even if you fully utilize all your funds with the expenses, you still have to complete the third section, lost revenues. Accordingly, if you fulfill all of your earnings through lost revenues, you still have to complete the expenses section. So this full report is going to be needed. And then finally, the fourth segment, there is some non-financial data. Data around employees, part-time employees versus full-time employees. Most of the information in categories 2 through 4 are actually broken down by quarter. Even though you can't do a comparison or claim amounts by quarter, it has to be on a calendar year basis, the reporting is by quarter. So that adds another unique element as it relates to tracking your data and being ready to report this when the portal actually does become active. So when I said that first area, the demographic information, most of you know who you are. That's pretty easy, right? You know your tax identification number or your employee identification number or your social security number, depending on what type of entity you are and how you receive these funds. But there are lots of provisions, as Kim pointed out early on the ability to share funds, especially around the general distribution. So if funds are being shared, who actually reports on those? That is what this guidance that is listed in the post-payment reporting document includes. It explains how you determine that reporting entity, who is going to report on which funds. There is also a frequently asked question that relates to this specific topic and the ability to share and transfer funds among related entities. So if you are an individual or a single organization, probably not that complicated. If you have multiple entities and tax identification numbers within your reporting structure, I encourage you to take a look at this because there isn't just one answer. It fully depends on who received the funds, who expended the funds, and how they got shifted among the organizations. Next up, we're going to cover that all-important second category, which is often referred to as step 1. This is identifying expenses. So what expenses do you have that relate or are attributable to coronavirus that you can claim for this program? So first off, I know many of you already know this, but I always have to point it out. You can't claim amounts that another source has reimbursed or is obligated to reimburse. Sometimes that becomes more complicated than others. For example, PPP programs, cost-based reimbursement, etc. And we'll cover some of these topics here in the coming slides. But important to just understand as an overarching premise for this program, you can't claim amounts someone else is reimbursed or obligated to reimburse. Now, the expenses can include G&A or healthcare-related expenses. It's important to point that out because when you have to go into your report, there are 2 special categories. There's general and administrative, and there's healthcare-related. And you kind of have to take off your normal accounting hat, if you will. Forget the understanding that you normally have, and I'll explain what I mean in a minute. So G&A expenses. What is meant by that? You can see the listing here. What is unique is you see the 3rd and 4th bullets, for example. Personnel and fringe benefits. This is not personnel and fringe benefits to your administrative individuals. This is across the board. So HHS views general and administrative in a very unique manner. Again, you see personnel, fringe benefits, and then all of the other types of costs that go into an organization. One that's often pointed out and misunderstood is this concept of mortgage rent. Why do they include that? That doesn't make any sense to me. Many of the others as well, but I like to start with that because I think it's an easy point to jump off of. I think everyone has to remember that this program went out to not just hospitals and nursing homes and health systems and physician practices. It went to dentists and behavioral health organizations, and you can go through the list. It's on and on. So it is a wide array of organizations and individuals. Accordingly, the guidance needs to be set up so that it works for everyone. We can now see why we are encountering so many problems, trying to create one set of rules for all of these types of organizations and individuals. So, mortgage rent, why do I point that one out? Imagine if you're a sole practitioner dentist and you have a practice with an office, you have administrative staff. In March, the country shut down. Your practice shut down, likely for weeks. You continued to have expenditures that related to keeping your practice open. Things like mortgage or rent, health insurance, malpractice insurance, IT costs. Not just the dentists, the physicians, the hospitals for for elective type procedures. A bunch of organizations experienced that downturn. That was the intent of this. It is how can you track those costs to be able to identify and claim them. Now, unfortunately, when it first came out, it sort of made sense. And then HHS came along and said, as I mentioned earlier, all of this needs to be tracked on a calendar year basis. It's calendar year 20 compared to calendar year 19. And I'll explain what I mean by that in a second. So then we get to healthcare related expenses. These are things that you probably would attribute to healthcare related expenses. Items like supplies and equipment, IT, facilities, etc. There was a lot of shakeup that happened in this area, and we'll cover what that looks like. So first one, purchases of capital equipment. From the get-go on this has been fairly unclear because right away when the guidance came out, there was a lot of terminology around temporary structures and intermediate purchases and things that really weren't truly capital purchases. And there weren't many great examples. But many people looked to the guidance and as more came out, thought there likely should be a lot of room to be able to expend funds on capital projects, whether it's capital expenditures or capital equipment. And then HHS in November came out with a may not have been November, prior to November, came out with a shocker that said capital items may only be claimed up to depreciation. And if I could have heard the screaming across the country at once, it would have been loud. And I think they got that. I think there was enough pressure from outside organizations that quickly got redacted and new guidance was released on the 18th of November. So the first of that deals with capital equipment. Specifically, are you limited to only claiming depreciation on these capital equipment purchases? And the answer is no. If your purchase is directly related to preventing, preparing, or responding to the coronavirus, you can claim it at your cost, not just the depreciation. Perfect. That helps. And then I read through and went, wait a minute. They're including masks and face shields and gloves and gowns and biohazard suits and disinfectant supplies. I don't know who out there thinks of those as capital equipment, but I normally don't. So it got me thinking, why would they do that? And it actually kind of makes sense, and I view this in a positive way. Most things are going to be allowable up to the expenditure level, correct? So you're tracking your expenses. Well, how many of you stocked up with a significant amount of PP&E or disinfectant supplies or other items that I just railed off? A lot of you. And if you do not use them and they're a stockpile, how do you claim them? I don't know either. So when this is identified as capital equipment, basically saying you can claim the cost, that is the door that opened to allow for these types of expenditures to be able to be allowable. So next up, we talked about equipment. Projects. What do projects look like? The same type of thing. We were looking like we were going to be limited to just the depreciation expense. So they came out with guidance, same date, that basically says the amounts can be fully expensed or claimed, because you're not going to expense it probably on your financial statements, only in cases where the purchase was directly related to preventing, preparing, and responding to coronavirus. I find this both helpful and confusing. I find a lot of gray area in determining whether some of these major capital projects are directly related. So they do give some examples, and I find those to be helpful. In this area, I do think there is a lot of opportunity to be able to identify projects, whether now or between now and June 30th, that you can actually claim funds on. One important piece to point out, as you get into the realm of capital equipment and capital projects, the more money you're probably likely going to be spending. And it isn't just claiming funds, it is going to be actually expending it, right? So it's money out of pocket. That's a completely different risk. So what I would often recommend, or what I do recommend, is that if you haven't yet, start documenting your position as to why this expenditure is directly related to the conditions noted, preventing, preparing, and responding to the coronavirus, how it fits into the FAQs and guidance at the time you make your decision. The higher dollar amount of the project, the higher need for documentation, because at some point, someone is going to be asking the question as to why this is considered a program, an expenditure that the government should be paying for you. I would also caution people to look at, when you have a capital project, whether everything in that project is fully attributable. There may be situations where you have a vast majority that are, especially related to HVAC systems or retrofitting a COVID-19 unit. But if you're reconfiguring your ICU unit, while you're in that process, you may make other changes that really don't relate to coronavirus, which is great. It's going to actually save you money because it would have cost a lot more otherwise, but is it really for this purpose? So be sure to take a look at that. As I mentioned, any of these costs, including these capital expenditures, cannot be claimed if reimbursed or obligated to be reimbursed by other sources. So you start with reporting your actual expenses incurred, and then you reduce it by the amounts that have been reimbursed by other sources. And I keep saying are otherwise obligated to, because we'll talk about things like cost-based reimbursement, which happens after the fact. There's also some potential to recognize amounts that are marginally increased. So let's see what that looks like. Oh, sorry, one first. Order of funding usage. So I talked about using or reducing it by other funds used. If anybody has been involved with FEMA previously, then you probably know FEMA considers themselves a payer of last resort. And because of that, they often are the last one on the order of when you apply funds. So in this case, HHS is actually considering themselves a payer of last resort. So you end up in this unique scenario where you have two different organizations, two different funding sources fighting to be last. The FAQ that was released provides not much further guidance on being able to help clarify that. Now, that being said, I think it's important because it basically means any other funding program you have, whether it's state funding sources, contributions, grants, or actual patient billing encounters, all of those are considered other funding sources and should be reduced. So here's an example of that I was mentioning previously of using this incremental cost increase. I think it's an awesome example because it really lays out what they're looking for. I think it's a horrible example because if I try to put this in practice for 99% of the organizations that I work for, it is an effort in futility. It is a very complicated process to be able to identify something at this level. But let's cover it anyway, because I think it helps understand what HHS is looking at. So let's say you are a provider, and a physician, let's say family practice, and on average, for any of your office visits, pre-pandemic, 2019, you had an average expense per office visit of $80. Post-pandemic, that increased to $85 because of increased expenditures, overhead, a lot of the other stuff that we were just talking about. So in this scenario, you have this $5 delta. What can you do? Can you just claim that? No, but sort of. So the first example given is you take your office visits and you look first maybe at your Medicaid population. And Medicaid's reimbursement is $70 because, of course, they're not going to pay you your cost. So they're well below your normal cost, even more below your post-pandemic cost. So that $5 is allowable. You take the difference between your post and your pre-pandemic averages, and that's claimable. In the second example, let's take Medicare, and their reimbursement's $80 because they're paying your cost. Now your cost went up, and this isn't a cost-based reimbursed organization. This is a prospectively paid one. So in that scenario, you get to claim the $5 again because you're not getting paid that difference. Third example, commercial insurances. So Blue Cross is paying you $85 a visit. Historically, you had a $5 profit margin on this. Because your costs increased, should you take that hit? Luckily, HHS said no. You previously had effectively a $5 profit margin. They didn't increase their payments for your increased cost, so you can report that additional $5 on your expenses to be allowable under this program. Well, let's say that same payer, maybe now United Healthcare, they did provide you with a supplemental payment from March to now, where they're going to give you an extra $5 a visit to cover your COVID-related costs. If that's the case, that extra $5 are effectively covering your costs. So that wipes out any amounts that you can claim. So you can see how that offset occurs. Another example, PP&E. Most of you have PP&E, and we already covered this once dealing with how you can claim it when it relates to kind of that bulk expenditure. But what about your standard operating PP&E? I mean, in 2019, you still had gloves and masks and gowns, right? And now you do as well, just more. And you're cycling them faster, and you have much different items. 95 masks abound. So the guidance from HHS through an FAQ gives an example of PP&E supplies. And I fully realize once again this says PPP, and I think it's just because of all these acronyms, but assume that should mean PPE supplies. So last year you had $1,000 of supplies, and this year you have $4,000 of supplies, which makes sense. You have a lot more, right? $3,000 increase from last year. First, HHS says, go look at that $3,000 and figure out how much of that was actually attributable to coronavirus. Great concept. I'm not sure how you do it. But in this scenario, they're going to say 2,500 of that 3,000 related to COVID. I assume the other difference relates to things like cost increases and supplier contracts, et cetera. I have no idea. But now you have 2,500 you potentially can claim. So then what do you do? Well, now you look at what was reimbursed or obligated to be reimbursed by other sources. In this case, $1,000. So 2,500, reduce it by the 1,000, and you get to the amount that you can officially claim. Again, the idea, the concept makes sense. Putting this into practice becomes very difficult. So I think as you work through this, a couple of things to note. One, HHS is really looking at things on a calendar year basis. So when it comes to PP&E, that's how it should be viewed. Calendar year compared to calendar year. And if you're going above and beyond, unless you have state grants or other sources, you probably don't have that reimbursement, but you can't just ignore it. So be sure to understand whether you have any other funding sources. Cost-based reimbursement. HHS basically said if you're under a cost reimbursement arrangement, where the payer agrees effectively to pay for your costs for their portion, then those can't be excluded or can't be included. And you need to use some rational method of being able to identify that. Important because your reporting, again, is calendar year, and many of you are probably June fiscal year ends or September, and or your cost report isn't completed until months after year end if you have one. So again, another factor to consider when you're looking at expenses claims. So we just talked about step one, these expenses, or the second section of reporting. Step two is lost revenues, this concept we've heard a lot about. And I've often been asked, well, previously the guidance said we had to do step one, and then you do step two, but you reduce step two by step one. And that was true. However, in the November 2nd guidance, they did change this so that they are mutually exclusive of each other. Identify the expenses, identify the lost revenues, and those are both amounts that you can claim separately. So let's talk lost revenues since we just covered expenses. Effectively, lost revenues is again measured on a calendar year basis. It is calendar year 20 compared to the same period, calendar year 2019. If you have to go through June of 21, you can do a comparison to the same period in 2019. Unfortunately, this calculation is very clear that you can only adjust it for certain circumstances. And what I mean by that, most organizations continue to ramp up their operations. They want to provide more access to care for their patients, for their residents, right? You may have opened up clinics. You may have expanded operations. If any of that happened, you can't take credit. You can't adjust your calculation for that. Similarly, you may have closed clinics or lost physicians and had a downturn in operations outside of COVID. Unfortunately, once again, or maybe for you, fortunately, as it sits now, you can take advantage of that. You can claim amounts that really weren't related to COVID. So hopefully this is an area that's getting addressed. You'll see here from the modifications, it continues to change incrementally. So first, it was on the 28th of October, it was noted that 2020 revenue, so your patient revenue, should include other assistance received. This is generally not a good thing. It means that if you have PPP loans, if you have state funding, you not only get to reduce that on your expense side, you get to add that into your 2020 revenue, effectively reducing your lost revenue. Third-party settlements. This is probably one that, can go either way depending on your situation, but it makes sense. So if you have settlements with third-party payers that relate to periods before 2019, you can exclude those. So say you got a 2018 cost report settlement in 2020 requiring you to pay back $500,000. It doesn't make sense for you to include that. Similarly, if they gave you an extra $500,000, that shouldn't be a negative. So you exclude those amounts from the calculation. And then finally, on the 4th of December was the last change, or at least the last for now, where fundraising, grant donation, and other supporting revenue streams that contribute to funding patient care should be included. Similar to the third party, this can be both a potential positive and negative. I know a lot of organizations that have had a higher amount of donations and grants in the current year to help fund the operations because it has been a downturn. So in those cases, again, you're getting harmed because of the generosity of donors. So something to be aware of in that. HHS also clarified, because previously they had noted that you can use any rational method such as comparing to budgets from the prior year or for the current year. You cannot use any kind of budgeting or any budgeted revenues as a basis for this reporting. It all has to be actual. So the other assistance received, I just mentioned, that needs to be added in. And this is also a category that needs to be reported on this report due in February. You'll see things like the PPP program, spelled correctly here, and other CARES Act funding. The one to point out, they actually added in interest earned. Likely that's not a big dollar amount, but kind of unique that it actually falls within this category. I mentioned the third-party payer settlement, so I covered that. Here's the FAQ that you can dig into further. And same with the fundraising, donation, grant type revenue. So when we talk about patient revenues, what does that mean? Because for some of you, that is not necessarily easily identifiable and clear. So for those continuing care retirement communities that are joining in, if any, can you include entrance fee amortization? And the guidance says yes, as long as you consistently treat it as operating revenue on your financials, and you treat it consistently from 19 to 20. So if you include in one, include in the other, or vice versa. Shareholder or partnership payments, no, pretty clear. Insurance, retail, or other real estate revenue, no. Rentals to residents in skilled nursing facilities. This was unique because they, in the point above, excluded real estate. So a lot of the nursing homes said, well, wait a minute, we're effectively a real estate company that then provides healthcare services on top of it. So can we not claim any of our room and board? So the guidance did say, yes, you can. You fall within that category. Tuition. No, tuition cannot be completed or cannot be included, sorry. Prescription sales, generally no. However, if you're involved in the 340B program, there are savings generally obtained through that program, and those should be included. DME and prescription type sales of actual items, no. Joint ventures, no. And weirdly enough, intercompany rents, both sides can be included. Meaning, if you have the intercompany expenses, it should be in your expense calculations, and the revenue should be in your operating revenues. I do point out that the last four items specifically relate to phase applications. So those are still fairly unclear as to how they fit into the reporting guide. But in lieu of other guidance that gets released by HHS, in clear definitions, this would be the area that I would probably look to provide some clarity as to what they're looking for. So other reporting requirements, as I noted, there's 4 different categories. That fourth category, don't skip it. I know the second and third are a lot of important information. The actual expenses or lost revenues you're claiming, that is where you should focus your time. But don't leave this till the last minute, because there are there's lots of information that's needed here around personnel metrics, patient or resident metrics, and facility metrics. And again, broken down by quarters and often broken down into individual categories. So if you haven't started tracking and identifying that information, I would recommend you start now. We at least have 7 of those 8 quarters available. Start pulling that data together so that something that we know isn't going to change and isn't unclear can at least be accomplished now. That's where I would start tracking this information if you have not yet. So with that, I have covered quite a bit. I think we are happy to open up to questions, or I can expand on a few more areas as we see fit. So maybe Kim, anything out there? All right, I'm flipping through the Q&As here. So the first question I see, where do we find the report to start collecting the data? I've looked on the HHS site. So if you go to the HHS website and go to provider relief funds, when you're in there, and it was on one of the previous slides from Kim, within that section, there's 6 different separate links. And one of the links deals with reporting and auditing. And if you look into that, there's a link for a PDF, and it includes the items that I just referred to, all of those 4 categories and the specific details. The latest one is November 2nd, 2020. So make sure that you do grab the right one. Next question. The methodologies for critical access hospitals to determine sorry, I got pop-ups covering it. To determine unreimbursed COVID cost. Use cost report by cost center to calculate reimbursed rate for A&G, nursing, radiology, etc. I think it's a great question. As I mentioned, there isn't a clear answer on this in the FAQs. What HHS says is that you should use a reasonable methodology for determining how to adjust the cost that you have for these amounts to be reimbursed by other groups. So to some extent, you can make an argument, maybe that is on an organizational perspective. It may be a benefit to look at it by cost center and actually run it through or consider it within your cost reimbursement calculation if you're a critical access hospital. Next one I see. So could we use this money to pay rent to keep our doors open if we didn't use PPP money to do this? Potentially. So as I said, I think you have to accumulate the costs and you have to look at the cost categories in each of those categories compared to the other. So if you fully expended PPP on payroll, well, that does open up the door to say, yeah, rent is going to be more available. Then I would look at which of these costs are attributable to coronavirus, and I would specifically identify those costs that are within that period. I do think when you do that, you have the opportunity to. However, there is some risk depending on what you've submitted as costs for your PPP program. But in short, yes, I think there is some opportunity to be able to use this for those costs. Next one is the cost per visit method related to G&A or total cost, including provider-related costs to produce a visit. Great question. I wish I had the answer. You basically saw the entire FAQ as I did. I am not sure what they include in there. I would imagine that it is a total cost type scenario where it's effectively trying to get to what is your true cost per visit. That's sort of why you're comparing to how you're getting reimbursed. But unfortunately, I don't know. When I look at the fact that they're saying that, for example, from a commercial payer, you're getting paid $85 compared to your cost of $80, that makes me think it's total because G&A would be a lot lower, right? You'd have no profit. You'd be out of business quick. So that would be the area I'd look at. Next question, I'm new to PRF, PPP, EIDL, etc. Can you recommend resources? With a small one physician medical practice and need guidance. Great question, because I know this is confusing for many. Obviously, you have us as resources to feel free to reach out. I know there are lots of resources available for each of these. The PPP and the EIDL, I have less direct information on, but I'd say on the PRF, the number one source is going to be the HHS website. And then I know a number of other websites and organizations provide materials around this. So, for example, I know Eide Bailly on our website have free insights over many of these programs. So feel free to go out and grab information from that or continue to try to identify these types of webinars. And hopefully that gives you a decent amount of insight into some of these answers. Kim, anything to add to that one?
Yeah, can you hear me okay?
I can.
All right, along with that, you might check your industry organizations, particularly the MGMA or your state Medical Group Managers Association. They may also have resources. I know they've published a lot. There's a ton out there on the internet. If you just spend some time, if you start with the government websites, particularly when it comes to the PRF, and we provided you with the links as well as some of the written materials from that. If you start with that and then supplement that out with other things on the internet, I think you'll probably get more than you want to know.
I completely agree. The internet, a vast wonderland of useful information, as long as you find the right stuff.
Yeah.
All right. Next up, can management salary spent working on COVID issues be included even if we would have incurred the expenses anyway? This is a very common question asked, and I wish I had a direct answer. Unfortunately, this is one of those very unclear areas. Here's the issues at hand. One, HHS uses in a lot of their guidance verbiage such as in addition to or additionally, effectively similar to the term incremental, meaning costs incurred above and beyond what you otherwise would have. There's also an argument against basically saying, you know, has anything happened, your management are probably going to be responding to it. That's kind of why they're there. Or a lot of the other individuals in the organization, that is their job, right, to help respond to potential issues as they occur, including COVID. Now, that being said, I think there's potentially opportunities to, through this calculation of the G&A expenses. However, if you really haven't replaced those costs with anything else, the risk is fairly high that those are not going to be allowable. But once again, this is a gray area that the guidance just is not clear on, and has not been able to provide a definitive answer. And therefore, that's why I see this as a higher risk area for organizations that are attempting to claim some funds that way. That being said, I would definitely still encourage you to track these types of costs, because at any point, as we see, the guidance can change. And if the guidance changes, then at least you have the information available and you can claim them. So I know there's a couple more questions, but we've bumped up against our timeline here. Kim or others, do we want to do, I'm happy to keep answering questions, but I don't know if there's any other administrative items.
No, I think you're okay. If you want to take a couple more, if you've got time, Tyler. So Tyler, are you there? All right. I'm not sure whether we're still on the program or not. If not, I think Tyler may have been cut off. So if we're still on the program, I'll touch base with Tyler and see if he can reach out to answer some of those questions that are still pending. Otherwise, we appreciate your participation in the program today. Thank you very much. Good luck as we go through this process. Again, make sure that you stay on top of the PRF website so that you're alerted of updates. To the extent that you are a member of an industry organization, those can be helpful also to alert you to updates. Thank you very much.